Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at Schnell Investor, and you can also find my blogs on gregschnell.com as well as StockCharts.com. So this week we've got lots going on. We had a big market crack in the NASDAQ, and I think one of the questions we have to ask is, will other sectors break? And as big as the sell-off was, it wasn't broad. Energy sold off hard, tech sold off hard, but a lot of the other sectors just stayed in line, and you could hardly tell there was anything going on. But bears definitely entered the playing field this week with the push into technology. Some of those names were hit hard. As an example, Tesla had a swing intra-week of 25% from 500 to 375. So tech's breakdown was Wednesday, Thursday, Friday. It peaked on Wednesday, so we have to be trouble getting too bearish when you hit all-time highs on Wednesday and finish lower on Friday. So the big question we've got is, will other sectors crack? And if you're interested for more information about gregschnell.com, you can head over there and check it out on the homepage. It'll walk you through all the things we offer there. So first of all, here's the S&P 500, and again, a big rally up, and we can see obviously that we broke a trend line here. The real question is, what if we pick a shallower trend line? Would we, are we just going to bounce off that? So it wasn't horrible. Obviously, if you were in tech, it was quite hard, but you'd probably been telling a few other people about your big successes, and all of a sudden it rolled down very quickly. So one of the things that we want to talk about today is whether or not the market has the power to get back through using some of the different sectors and going through that information. So we're going to cover that off today. This was the 1 week hit in tech, and you can see all the big names: Mercado Libre, Electronic Arts, Microsoft. These were down 6%. Workday was down 11%. Here's another gaming one: Activision, Blizzard. Walgreens Boot Alliance is a surprise to me, but it's down 5%. I mean, that thing just can't get any love. Citrix Systems down 5%. So it was across the board. It was a pretty mean swipe, and if we go to the other end of the parade, by the end of the week, there was very few that were up. So Broadcom was up 5%. And when we go look at that chart, that was a pretty nice breakout and push and hold, right? It held up there. I've been talking quite a bit over the last couple of weeks about how on the NASDAQ 100, and I'm just going to go there, NASDAQ, what I want to show is this weekly PPO up here at 7.5%. When you go back 35 years, we haven't been up here for that long, for very often. So this is, I will say that it's very bullish, but one other thing to keep in mind is that when you get a high reading like this, it doesn't usually break down directly. Now, that doesn't mean it can't break down directly. I would just say that even if, let's just say it pulled back 20% and then rallied and then failed again. I think the thing we want to watch here is looking out here. You can see I've got the line at where our current level is. And going back into the year 2000, we got up to this high, and we were just, when we were reaching this level, we went on up to higher highs. And late in 99, we turned around and made another steep advance. So just because we've had a steep advance and it would appear everything is so extended, this could just continue to bounce. Now, I will point out, since the NASDAQ started in 1986, we were up there. We were there in 91, and we were there in 95. We've easily exceeded some of the other levels, 96 and 97, blown right through those. But the big point for me, I think, is that, after all of these major peaks, we didn't really drop hard. I mean, it doesn't look like much, but we didn't get down to the 40-week moving average, as an example, in lime green. So if I just clean this up into a solid line. Let's change the color on the simple moving average so it's a little easier to see. We're going to go red, but we're going to make it thin, and we'll get rid of the 10-week moving average, and that will allow us to see things a little bit clearer. So when we look in here, we got extended in all of these cases above the 40-week moving average, but I think in 1995, you can see we hit it in roughly July or August, and yet we went sideways all the way to the next year. And what really happened was the market, or the moving average, caught up with price as opposed to price dropping back to the moving average. In 97 and 98, you can see that we did have the rollovers where we came back and touched, but bounced off that in a big uptrend. The only real break from these high levels that was immediate was the one coming out of the 2000 high, and we all know that that was quite excessive. Mind you, we feel like we're there today. This was up at 13%, so this was really, really high. We pulled straight down to the moving average, then wandered sideways for a while, and then fell apart. So I think one thing that's important to remember in all of these cases is the 40-week moving average, or the longer-term moving average, ended up being a bounce level when the market corrected. Now, where it goes from there, that's a good question. But we're a long way above the 40-week moving average. It's down at 9,500, and we're up here at 12,000. So a 25% pullback would be a lot. I think the bigger thing for us to focus on here is to try and just say, the market looks like it wants to correct, and we need to be aware of that. So that's for the tech sector. Now, one of the things I want to point out when we go to the sector summary, so this was for the week, and I'm in industrials. Let me just get out of here. What I want to get back to is this overview. And when we go look at the 1 week view, yes, we were red in technology and energy. Consumer discretionary and consumers communication services were also very fast moving in August. And so as we came into this high, these were kind of the three areas that were really, really bullish. One thing I would point out is look at the financial sector held up well, utilities held up well, materials was even positive, and consumer staples started to move up. And one thing that I noticed on the Tuesday or Wednesday was it was the first time in a long time that we had seen some of the defensive sectors outperform when you go do a market snapshot, just what was going on that day. So that to me tells perhaps we're starting to change trend. And again, the move was significant, but I think one of the things that we'd need to see now, if this is going to continue to roll over, is probably people start to sell out of some of these other sectors. They haven't performed nearly as well, right? If we just go, over the 3-month period, when you look in here at healthcare and real estate, they haven't done nearly as well. And energy sector lost most of this in the last 2 weeks, I would say. They really have fallen hard. And late in August, the energy sector was one of the top performing areas for a couple of weeks in there, and then immediately became one of the worst. So it's been very volatile in the energy space, and that includes XLE, includes solar and wind, not just fossil fuels, but quite a different hit there. So anyway, the point I was going to make is all of these sectors were very high performers. Utilities had done nothing, and the financials have done nothing for 3 months. As we're watching here, now we'll watch and see if they start to sell off again, and that would probably be a bigger clue for us. I do want to point out this move on Tesla, and I got a question in my email about using log scale or arithmetic scale. And the reason that you use log scale is, see how this looks irrelevant back here. When you go to an arithmetic scale, all of a sudden it goes parabolic. Now, with Tesla's move, it was $50 to 500. So it was either way, it was parabolic. But when you change it to a log scale, what happens is this previous price action becomes just as important, or you can see it just as clearly as you can see the most recent price action. And even though this moved 25% on this week, again from 500 to 375, that's pretty big. For the COVID situation here, we moved from 190 to 70, which was a pretty big haircut. Anyway, in these large names, you're going to have that volatility, and you get to live with it. But the 10-week moving average has been holding quite a few of these names up, and so a breakthrough the 10-week would probably be more meaningful. Now, I did go and put together this list of names. These are all of the Dow Jones Indexes, and I put them into a chart list. Now, one of the things we can do is we can sort by, as an example, what stocks were moving up the most this month. And the way to do that is you get rid of these numbers on the front end. So I'm just going to go down to the bottom here. And if we hit number in sorted order, we could do that. But what we want to do is take off the numbers. Take off the numbers first. And just control top. I'm missing a button. There we go. No. For some reason, I can't do that. Okay, let me just get this fixed here. Edit list. And then from edit list, what we want to do is go to the very bottom of the page and select all of the charts and then just remove the numbers from them. So we're going to say remove the numbers, and it'll only do it for this list. And then we're going to go back and we'll sort it by whatever the most the areas with the biggest move this month or this week, however you want to do it. So let's just say that we pick whatever 1 week, gives us something to sort on, and we can either do it from worst or first. We can just go watch and see which areas. Now, isn't it interesting that coals and some of these areas held up pretty well, but anyway, the point being made is just go to the very bottom, number in sorted order, and now it'll keep that sort order for us. But the idea being, when we go in here and click on this, we want to go to 10 per page. And as we look through here, this coal sector's been bombed out. I want to just change my chart style here for a second. Go to weekly, and at the very bottom, to change the chart style on the whole list, and I thought I had done this before, so I do apologize because I forgot to hit save, obviously. What I want to talk about specifically as we work through these chart lists is looking for topping patterns. And again, the stuff that held up well, that would be good to watch for. But now what we want to see is just how many of these are actually starting to break down. So the distillers and vintners, this is kind of a consumer staples. They had a good strong week, and it looks like it's getting ready to break through all-time highs. That might be an area to hide out. And then non-ferrous metals. So industrial metals have been doing very, very well, and we'll just keep watching. But we're hitting new 2-year highs in that particular index, so it's pretty bullish. Tom McClellan wrote a great article in the Top Advisors Corner on StockCharts. And if you go read it, it's about copper. And one of the things that I think is going to happen is copper will pull back, but it will actually be one of the better names. And I'll be doing a big special on the move to electric at the end of September, on September 30th. And you'll start to see some more information about that rolling out shortly. The housing and lodge REIT here has been starting to perk up, and part of it has been on the back of the quick test. I think it was Abbott Labs with a $5 COVID test in 15 minutes, and it didn't have to get sent away to a lab. So that was pretty meaningful. And this whole area is starting to perk up along with travel and tourism. So when we look at the retail REITs, I think that's just sideways. I don't really know. That's an area I want to look for improvement. Recreational services, a lot of people have been doing staycations or close to home, getting out in the back. RV sales are up, all that kind of thing. So that's one area that's performed really, really well in this whole thing. Container industry is pretty defensive. So perhaps this is going to break up to new highs, maybe new packaging required because of COVID or something. But this looks very close to a breakout. If it doesn't break out, that would be typical, right? It's been stalled at this 400 to 420 level for years. U.S. insurance business tried to break out and then pulled back inside. If that's a failed breakout and it starts to roll over, we'd want to know that right away. So we'd be looking at the 10-week and the 40-week here. And if those don't hold, that would be a bigger clue. And if financials start to break, that's usually really helpful. But lately, and again this week, financials held up very, very well. Telecom's trying to break out to a new high here, so that's pretty interesting. Getting above this, call it 405, 406 level, and we closed at 416, so we finally got a breakout there, and that might be more defensive. Steel index has been pushing higher. The previous one was non-ferrous metals. This is steel, but it's holding up. It's above its 10-week and 40-week, and if it starts to roll over, what you'll notice here is since the decline started, the PPO has been spending time most part below zero. So we don't want to see this start to roll over here. That would be bearish. And again, these were the best performing this week. So now we're going to get into, as we go through this list, we'll see how they drop off. So here's the commercial vehicles and trucks, and freight has done a really good job. This is new 2-year highs here. So this index has been popping very, very well. It's at 2285, and 2321 was the 2018 highs. We're right there. If this starts to fail again, that would be important, because when goods move, that's a good throttle measure of the economy. So we'll keep watching that. Industrial metals, I've already mentioned the metals enough. Multi-utilities index, this has been grinding sideways, and it's been a big puzzle for me that utilities haven't done better. But they've been holding off here, so we'll keep watching just to see how that one behaves. I really don't have a situation for that. The REITs, again, I think really have to be specific on how the REITs are going. The residential REITs haven't been getting paid. The commercial REITs are struggling. Downtown REITs are struggling. Industrial office or industrial warehousing space has been doing okay, so that's one of the interesting ones. The bank index has been jogging sideways, but again, it had a nice positive week this week, pushing up a little bit. Beverages, another defensive, so Coca-Cola, Pepsi-Cola starting to move higher. And then U.S. life insurance index just sideways, still in the financial sector. The airlines I like. The airlines have been pushing up lately, and they had all kinds of reasons to sell off this week, and they held up nicely. And on a 60-minute chart, the chart basically, you couldn't tell that the tech sector had gone wonky for the week. Specialty chemicals is trying to break through this 950 layer. That would be new year-to-date highs. It's okay, but I think the point I want to make here is a lot of these don't look like they got damaged as bad as, say, the index did, like on the NASDAQ 100 here, where we saw this kind of sharp move down. And let me just shorten that up to a more reasonable time frame so we can just see the actual move. But for the week here, this ticked down pretty good. So what we want to watch for on these charts as we go through them is what charts are doing that. And these are still holding up okay. They don't look that damaged. I will say apparel retailers, the PPO is right at zero. So if this rolls over here, that's a bearish place to be. Don't really want to see that start to happen. The water index, this one's been kind of weird. It, fell pretty hard here, almost 30%, rallied back up, got to the prior high, and has been pulling back for almost a month. The PPO is starting to make lower highs, so I'd be very careful on this one. If this starts to roll over now, that would be a signature I'd be watching for. The chemicals index, again, trying to get through this prior high. More utilities, just grinding sideways so far. Commodity chemicals, soft drinks, here we go. So we're starting to see this push higher. And again, is this a defensive move or people staying at home doing more home entertaining? That could be it. Auto parts, I've covered this one off on the Market Buzz not too long ago, and it hasn't been able to get through the June highs and hold there. We want to watch and see if that can happen. But again, the car dealerships were actually doing okay. In some cases, they were having trouble getting inventory, but I think one of the bigger things to be aware of is just there is immense competition. And again, the move to electric, I'll be covering that off at the end of June. And a big part of that will be the discussion about the car business. The full line insurance is starting to roll over. As you can see, the 10-week is sloping down here, so that one's quite interesting. Basic materials pushing up higher here, and again, gold is part of some of these indexes, so gold has actually done quite well, so that can help them as well and kind of distort it. Utilities, again, sideways. Conventional electricity, this is one that I would expect to do better as we come through with the whole electric energy thing. But until it can get through its 40-week average and stay above it, I think that's an area you kind of have to be careful entering until it actually starts to get some upward momentum. Looking in on the food and beverage, this is really starting to rise up, so that's nice to see. That area's been badly hit by this whole COVID situation. The insurance index moving up, telecommunications. This chart doesn't show what we saw in the mobile communications, but it's been going sideways for 5 weeks, had an outside bar this week and closed in the middle of the price range. Again, we're sitting right on the uptrend here. Is it going to hold? Will it break out to the upside? And the idea being, if we come and look through these charts next week and they're all starting to tilt down, that's probably going to tell us what we didn't want to see, but kind of add finality to the, yes, it is going to broaden out to other areas, and if they all start to fall through their 10-week moving average. The delivery services have been holding up really well, right? That's your FedEx and a lot of home delivery stuff. So things have really been bullish there. And you can see since it broke the big downsloping area here, that was important. The PPO got into positive territory. So I still like that area. It might pause a little bit, but still a lot of people ordering thing that way. So that should be pretty helpful. Non-business or non-life insurance holding up, just trending higher, but nothing great. Reinsurance, again, same thing. Footwear, this one's been breaking out to new highs, and I'm always surprised it's not at the top based on how many shoes are out there. But what we see here is just breaking above to new 2020 highs, and as it's breaking out here, still looks okay. We had a doji bar this week where price opened and closed around the same level but tested higher and lower. Medical equipment supplies, nothing really big here. We're trying to get through this kind of 2-year resistance layer. It was at 1,000 before. We've moved it up to about 1050, but really you can see since we broke through, we spent 8 weeks going sideways, so not quite as bullish as we wanted. General industrials. This is an area where I think as the economy starts to roll, this should really start to break out. And, we'd been downtrending for a couple of years already. So if this is going to roll over now, just barely back above its 200-day moving average, that would be bearish. We don't want to see the PPO roll over, I'll call it right near zero. As the downtrend started, that's where this market started to get weaker. Looking in on heavy construction, jogging sideways for 4 weeks. So you'll remember that the S&P 500 and the NASDAQ are way up and to the right. So all of these that are just kind of stuck in the middle here they all held up okay this week. So again, it's the tech area that really got hit. And that's kind of what I wanted to show here, is that it was really some specific areas of the market that took the big hit this week, and we'll go look at those right away. But as you can see, industrial engineering just trying to get through prior highs here, and basic resources, they've been going sideways for 6 weeks. Travel and leisure really started to accelerate last week. We're up against the tweezer tops in June when the market shot up and then pulled back quickly. We're still going higher here. We're trying to break through that prior high. As we slowly get used to living with COVID, perhaps this area can finally recover a little bit. They've been hit very hard. The mid-cap value index, this is just grinding sideways for 4 weeks. Household durables, I like the look of that. It's been up and to the right, very nice controlled price action. But again, the chart doesn't move very fast either. Food retailers and wholesalers, this broke out to new all-time highs. Who would have thought as we come through this situation with COVID? But they're definitely trying to get going here. So if there's an area that we'd like to keep watching, restaurants have been going up for pretty much 3 months. Real estate investment trusts, again, I think this is going to be a very hard area unless you know the assets inside. Okay, so let's quickly go look at the ones that had the worst week, and we'll just see which areas they were. And it was the growth index. They got hit really, really hard, down 3%. Computer hardware, so this is kind of primarily Apple, but not just. But this was a pretty big wide swipe, right? We saw a move from 6750 to 5500. I don't care how you slice it. That was a big move, even though it was only down 3% on the week. That's a wide-ranging bar. Just to go over here and look at some of the numbers. We're talking at least 250 points, 1,250 points, so not quite 20%, but very, very big. Drug retailers, that one's just driving into the bottom corner. I thought COVID would have helped them. Not yet. Large cap growth, this one, again, we've seen Amazon and all of those names move up meaningfully. Media agencies, this one was down 3% on the week, but really hasn't gone anywhere for the last 4 or 5. I won't really call that bearish, but if it starts to drop below the 10-week, if everything starts to drop below the 10-week, that's going to be a pretty good clue, or the 50-day moving average, that some things are changing here. U.S. asset managers, and again in financials, just jogging sideways. Small cap growth, that one took it on the chin. Down 3% on the week, but a big outside bar from up at the top down to the bottom. Pipelines, this is starting to roll over, much like the energy sector, pulling back down, and that might be showing up due to lack of demand. Business training, rolling over for the last 3 or 4 weeks. Durable household products, down to 1-month lows, but still above the 10-week moving average. And getting into support services, that chart's big outside bar. So a lot of these, that's what we're going to see, an outside bar where they tested higher and closed lower. The beer industry down 6-week lows. Telecom equipment really pushed down hard. So that's quite a big move. That chart definitely looks like it's in a downward trend, failing at the 40-week moving average. Automobiles and parts index, this has probably got Tesla in it because that's the kind of price bar that we've seen there. The U.S. Internet Index just reversing with an outside bar. Now, again, if it followed through, that would be something. But look at how strong the momentum has been. This has been up not quite every week, but definitely trying to make higher highs and higher lows most times. Financial services, trying to take out that 2020 high up in February, hasn't got there yet. General financial index, there's a few of these ones that are just kind of average. Forestry and paper. Forestry had a huge reversal in lumber prices this week, and so a lot of those names got hurt. The paper index, same thing. Technology index, so this one is one of the big areas, down 3%. Doesn't sound like much, but I think, again, it was that wide swinging from the high on Wednesday morning to breaking down meaningfully. Finance and admin, industrial suppliers, that's a new 4-week low, so that looks a little more bearish. You can actually see the momentum indicator starting to roll over. Integrated oil and gas is definitely pulled back. That's the refiners. The demand's been a little bit light. Oil and gas index going down. A lot of people want to short this. I don't really think we're going to get anywhere near as bad as we got at the low, so I'm not sure how much downside room there is there. Specialty finance, jogging sideways, but we've actually got a sell signal on the PPO. Automobile index, this is Tesla for the most part. That's the chart shape. And the home construction index has finally turned down. So that one had been unbelievably moving. So this is a big change for that sector. Marine transportation rolling down, and software and computer services. So I think you get the idea that some of the big names here started to roll down a little bit harder, but for the most part, we haven't given it all up. So let's watch this week and see what happens. Thanks for taking the time to join me on Market Buzz. Market Buzz airs Wednesday at 10:30 a.m. Eastern. You can also see the recording on StockChartsTV YouTube page. And don't forget to go and check out my website, and shortly there will be a place to register for the special on September 30th. Thanks, everybody. Bye-bye.
Hey, Grayson Rose here with Stock Charts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.